Got a job at Macquarie. Macquarie was great, but it was very hard to get things done. Bureaucratic the way they operate. I absolutely loved it. I got an opportunity to run as a 21-year-old, a multi-asset portfolio. I knew absolutely nothing about financial markets or, the back office, the front office, the middle office. It was a really good experience.
How do you think the Australian landscape is relative to peers, let's say, broadly speaking, US and London?
I think Australia's the land of the resources and it's a land of opportunity. But the world is an interesting reflection point in terms of going back to what we need. And I think governments around the world need to act.
Yeah.
I think defence and AI is something very, very big. I think it's quite scary. So the whole autonomous warfare and swarms and what's happening with defence is a huge initiative, a huge problem, and there's trillions of dollars being invested in it globally. Also identify areas where it is a big addressable market that you're seeing global funds, municipalities, governments putting significant capital towards. I think smart money follows smart money. I think that's another really big tip for those that are young. So if you're looking at sort of who's invested, who are your top shareholders, and if they've got a track record of building shareholder wealth and they've put their own money behind it, that's critical.
Mexicans are shooting at the Aussies.
Yeah.
Why?
Why?
Yeah.
Because they got on a plane and
They flew around Mexico.
They flew around Mexico, yeah. They had to put an ASX release on that.
A different kind of powder on the plane.
I don't know, not good.
Assays.
It's not good. I don't know what they were shooting on, but the Mexican cartels were shooting at the Aussies.
Mexican cartels shooting at the Aussies.
There you go.
How about that? All right, so we're rolling. Nivi, mate, thank you for doing this.
Great to see you.
Yeah, likewise. Look, I've known you for 6-7 years now. I've known you as a boss. I've known you as a mentor. I've known you as a business partner and a friend. I'm so happy you're here. For everybody listening, why don't we kick off with a bit of background on who you are?
Yeah, sure. So, look, came about 35 years ago to Australia. So, family decided to move from the Middle East and Israel and move across. And it was really, really hard. It was a really hard journey. Dad was an engineer, essentially. Couldn't get a job. 91, 92 interest rates, Ali, were 15, 16%, and there was a big recession across the board. So my father bought a service station, and my mother was essentially in the food business. And, they worked 100-hour weeks. I mean, I remember, as a young guy, didn't see my parents, unfortunately, and they were working so hard to really build a business. And then 5 years down the track, Mobil turned around to my father and said, look, we need you to buy 5 service stations, not 1.
Yeah.
And then at the time it was quite expensive. He couldn't afford it and had to basically go on sales, and Mum was a major breadwinner essentially for the household. So we did a tough, growing up, I think, with three of us and fought really, really hard and managed to do okay out of school and worked really hard to get where we are right now. But yeah, it's definitely been a journey.
How old were you when you got here?
6.
6.
Yeah.
What's it like? What's life like to a 6-year-old who doesn't understand you're in a new country? It's fully uncharted territories.
Look, you could probably attest to that as well, right? With your journey. But look, it was tough because you come into a new country and you don't know the language, and you really have to go out. What was interesting actually, I spoke actually just last week. I know we're going a little bit off topic, but one of the biggest and most profound actually successful entrepreneurs are actually the immigrants. Essentially, they're coming across because they've worked so hard to build up. So there's actually this fund. Actually, all they do is back immigrants essentially coming in, and immigrant founders. It's actually quite interesting. But it's really perseverance. It's a lot of hard work and dedication, and you just have to really stand out of the crowd. So it wasn't easy, that's for sure.
So what? Seeing your dad go through an entrepreneurial process early on in your childhood, like what was that like? Did you sort of know from early on, I'm going to do business, or was it, no, I'm going to study, I'm going to get a degree, I'm going to get a job, I'm going to, do the whole white
pecking order.
Yeah, exactly.
The pecking order. Yeah. Look, so going back to Shai, my father, he worked really hard. They decided to basically, after a while, to build a company called Australian Veggie Gourmet out of scratch. So Mum was a food technologist, Lion Nathan, Simplot, General Mills, McCormick. Dad had a good engineering background, and together they built a business, and they sold that business 15 years down the track to Yumi's and Acacia Capital. So worked really, really hard. But just going back to your question, I think I always had that drive of an entrepreneur because it's fun being your own boss, as you know as well. Yeah. So, and just building something for yourself. You know, I think that's really, really important. So, but it takes a lot of work.
Yeah, 100%, 100% every day. You know, I've met your dad a few times. I think for those listening, Shai is probably the man you want to have on a manufacturing floor. He's going to optimize every business. He's going to find those little margins. He'll find little inefficiencies in the process. Growing up, what was that like? I mean, did you firsthand get to see him build his business and optimize manufacturing and processing and all of that sort of stuff? And secondly, how did that shape your thinking towards efficiency?
Yeah, it's a really good question. Look, I did, absolutely. I mean, the service station that he built was the most profitable service station in Victoria. Yeah, so just, you know, people think, you know, all the service stations are selling fuel, and obviously fuel is quite a topical asset class right now, but it's not the case. I mean, you have to optimize. I mean, brought in my mother sort of in food, just the efficiencies of the markups and sort of looking at the business, you know, holistically. Yeah. But just, in terms of the food and the processing side, just to give you perspective, you build Australian Veggie Gourmet, they did sachets and dips and dressings and falafels and worked really, really hard. It sold to the airlines. He sold out to Schnitz. It sold out to some of the major franchises. But what he found is that rather than, you know, selling really small sort of little packets, the big opportunity is in the food services rather than, let's say, the Woolworths or the Coles. And he saw a really big opportunity there in terms of bulk, which you can get a much, much bigger margin. But just to give those that are listening, I mean, his business was doing only $2 to $3 million of revenues, but the profit of that was 65 to 70% EBITDA margins. Yeah, well, I mean, we look at businesses, Ali and I, we do this all the time. We look at hopefully they get 4, 5, 6% margins. Mate, in the food business, after your COGS, after your cost of goods sold, he was still managed to get 70% margins to the bottom line, which is exceptional. Just absolutely efficiencies, dedication, all full end to end, and absolutely learned a lot. Actually, I still remember back in high school when, you know, the school holidays where we meant to be going out and play, my sister and myself and my brother were forced to come and help the family business, and we're still going out and bringing up the tops and things like that. But things that you have to do as a small, you know, help out the family.
Mate, I'm sure you'd have a fridge at home full of all sorts of goods, I imagine.
Oh, it was a lot of fun, but unfortunately they sold their business 8 years ago. And now when I go over there to their house, I'll wear the dips, but you have to go to Coles and Woolies and buy them rather than actually open the fridge, and it was just right there. But quite a bit of fun. So
I remember you telling me a story. I think it points to some of the early experiences that, you know, I think have shaped you. So you worked at the MCG when you were in school. Tell us a bit about that. What'd you do?
You probably could tell the story inside and out, but look, it's actually quite relevant. So I remember as a young guy, sort of a 15-year-old going out, you know, first job was a pie boy. Everyone gave you a hard time because you used to sort of in year 9 and year 10 go out and have a few drinks at night, and then getting up at 5:30 in the morning when you're really tired and throwing papers and getting in trouble for hitting people's fences and things like that. It wasn't fun, but it did show a bit of drive. Always had that drive. And then the next thing is, I said, what am I going to do? And I loved sports. And I remember playing lacrosse at high school. And after a lacrosse game, joining as a pie boy, basically. Now, back then, this is going back to 98, 99, call it 2000 levels, where the Ponsford stand was still the Ponsford stand. They only had one food store. And really what we used to do is go up to the top of the Ponsford stand. I found a niche and found an empty space. And all the other pie boys are essentially the MCG. I don't know if they were lazy. They just couldn't be bothered taking up a big casket of food and goods. It was quite heavy. I don't know if me and you could do it right now, but it was probably at 20 kilograms worth of goods, right? And going up, you know, and finding a store and finding a niche, selling out and going down. And look, it was really just identifying an area where no one else wanted to go. And what was interesting back then as well, I don't know what it is right now, I mean, you know, the crowd gave us a pretty hard time wearing these fluoro yellow tops and fluoro yellow hats, but they saw, you know, you had to go out of your way, I feel. You know, there was the clerks who were 21-year-olds and it was us as a 14, 15-year-olds. And I felt that if you couldn't be direct with the 21-year-olds and tell them, look, guys, we need to get this and this and this, they just won't do it. So I think you just have to push. I'm not saying push the boundaries, but find areas where others aren't going. And I think that's really, really important.
100%. You got to find a little bit of that unmet need and go press on it hard. Tell us a bit about what the professional career looked like. So you've been in markets for, 2 decades or so, across a range of roles. I've known you as the founder of Peak Asset Management, which is one of Australia's leading boutique investment management firms. What did you do before that?
Yeah, look, so I still remember this. I did my Bachelor of Commerce and my honours in finance. and always wanted to go to the US.
Yeah.
It was just a big dream, and I know your family's there as well from Chicago. But I mean, just going to college is, it's sort of things that you saw in the movie. So got an opportunity to go to the Marshall School of Business and loved it, absolutely loved it. Because classes are a lot more smaller, and some of the people in the lectures there are actually professors that have worked at Bain and McKinsey and built multi-billion-dollar businesses, and they were essentially your own professors. So you had that insight there. I then got an opportunity to go to honours in finance, and it was great. I mean, got an opportunity at Melbourne University, but decided to go to the Monash side just because the classes were a lot smaller in TAT, but even though I did my Bachelor of Commerce at Melbourne.
Yep.
And then got a job at Macquarie. Macquarie was great, but it was very hard to get things done. Bureaucratic, the way they operate. I absolutely loved it. I got an opportunity to run as a 21-year-old, a multi-asset portfolio and learned from a guy by the name of Andrew Tridden, who was actually brought from UBS Warburg to come to Macquarie and basically set up the entire wholesale desk. So as a 21, 22-year-old who knew absolutely nothing about financial markets or, the back office, the front office, the middle office, it was a really good experience. I still remember Macquarie when I joined spent $1 million on a Christmas party. They had the presets going to Sydney, and there was a big concert there, and they got such a hard time because when the GFC hit, a lot of these people found it really, really tough.
Yeah.
So that was quite a big awakening. Loved Macquarie, learned a hell of a lot, got great exposure. But I just got frustrated at the age of 25, 26. I got frustrated because it's a little bit, you sort of can't do things. If Niv and Ali wanted to see a transaction, if we wanted to see a deal, if we want to see an opportunity, it was very, very hard by the time he goes to his risk, his manager, their boss. So it was 3 months down the track. And you and I know that markets move very, very quickly. So I just got frustrated and I decided to leave Macquarie.
What were you doing in Macquarie?
Pretty much everything. Back-end execution of trades, settlements, bookings, speaking to the clients, opening accounts, going to meetings, bit of research. It's really the whole end-to-end, which was good fun. It was great fun and it was good awakening, but it was a lot of hard work.
Did you get wiped out on any trade ever?
Didn't get wiped out then, but I did before Macquarie, which I've done some silly things in my past, decided to invest and use leverage.
Yeah.
And one tip I can give people right now, and you and I have gone through this probably in the last 15 years, I've never touched leverage because leverage is great on the way up, but you can get hurt. You can get hurt really, really badly. And unfortunately, as a young guy, this is going back now before Macquarie, as a 17-year-old, I put $5,000 in a trading account, a CFD account. And for those that don't know, CFDs is a contract for difference. So essentially, you're taking $5,000, you're leveraging it up 20 times, and you're taking big bets. Took that $5,000 to $100,000. Right, thought we're absolute heroes. Silly me, didn't take the $50,000 out and put a deposit for a house. Thought I'm going to take the $100,000 and turn it into $1 million, and lost it all. So just one food for thought.
How old were you?
I was 17, and I still remember going out for dinner that night. I just didn't want to say anything, and shied my mum Lynn because what's going on? I said, look, I don't want to talk about it. And
I just wiped out 100
I just
grand.
got wiped out on 100 grand. Now I made it, but it just felt like the whole world was caving in.
Yeah.
But learned a good lesson, and I think it's really important for everyone to think that you have to keep that in perspective.
Yeah. How interesting. Tell us a bit about Peak. You started Peak about 13 years ago. I've been there about 6.
Yeah. So half the value. Yeah, there you go.
Yeah.
Peak was formed, so after Macquarie, I got an opportunity at the age of 25, 26 to run a broking firm. I thought this is fun. Why not run a broking firm? And if it all turned to rubbish, I can always go try and get a job at Creston or UBS or something like that. But look, it was good. They were part of the Australian Stock Report. There was a trading division essentially, and we were doing all the execution.
Yeah.
And then they tried to IPO the business. They brought a few lawyers into the business. I said, look, no disrespect to lawyers, but lawyers make things difficult, and they don't know much about investing, and they're going to make it even more difficult than when I was at Macquarie trying to get things done. So I left, and my boss left, and I set up Peak. And that was September 2013. And I knew for a fact that I'll probably have 15 or 20 people follow me because I had, guys like the Noel Camerons and the Prudy Perusolos and the Andrew Van Der Zwans and some of the guys that you've dealt with for the last 6 years are still, with us for, 13 years later, which is fantastic, which is great because it's all about relationships.
100%.
Right, when things go up and things go down. But Peak was formed because, just have that flexibility. Now, I still remember we were doing absolutely everything. This is before you joined, but we were trying to do trades and execution. We even had a dashboard, and my skill set about IT, it's not great. But we're building dashboard to allow clients to come in and see their own trades. And we were just doing, cash solutions and structured products, and we were doing the whole thing.
Yeah.
And we didn't have an edge and we didn't have a unique selling proposition there. And we just realized very, very early on that what we're doing is probably not the right approach. So the business model changed pretty quickly. We're still profitable. I mean, the good thing is for Peak, we've never, as you know, have to raise money or it doesn't have debt, and it's been a great business. But I think you just have to always move and shake and adjust your business model with the time.
100%. This idea of focus, right? I mean, and I think you're really right in that. Given that we're in such a competitive landscape, and all landscapes are becoming super competitive, how important do you think it is? And some people listening might want to start their own business. They might be, I came across this term, entrepreneurs. Right, so they want to be entrepreneurs.
Yeah.
So to the entrepreneurs listening that get excited about A, B, C, D, where's the lesson in focus? Like, what do you have to say to that?
Look, I always say, as a university student, I still remember this. This is another story. It was myself and a guy by the name of Michael Abusayef, and he was one of my best friends growing up in university, and he's a smart cookie, right? He got a job at UBS Warburg at the age of 21, not only through the grad program, but across the board, and he's still there at UBS 20 years down the track, and he's now running the entire UBS option portfolio, and we were very competitive. I think you need to be competitive because if you don't have that drive and competition, you're not going to get far, and you need to continuously push yourself as well. But going back to, where the opportunity is just, you have to continue to work hard.
Yeah.
You need to work hard. You can't be a fund manager coming out of university and you know this. I want to become a fund manager and I want to manage $100 million. That's fine. But how do you become a fund manager if you don't have any money to invest in or manage?
Sure. Yeah.
So I think you just have to also, a lot of people I'm a big believer in attracting your own luck and building, the law of attraction.
Yep.
But you need to work hard. You need to persevere. You need to drive. You need to have that drive. I think that's important.
So let's wind the clock back a second. So 2013, you start Peak. What are you thinking at this stage? Like at this stage, do you envision? So do you have a certain goal in mind? Is it building the business, exiting the business? Is it building the business, expanding the business? Is it building the business, potentially getting more partners in?
Yeah.
Like did you have a goal? Or did you just start?
Look, I knew I was backing myself.
Yep.
I knew sort of what I'm good at. And I knew that I'll have got 20 relationships here that we can build on.
Yeah.
Right? I brought a guy by the name of Richard Rouse in, and he's, good guy. He left the business, actually maybe just before you came in 2019. Yeah. But he said to me, look, Niv, why don't we focus? Why don't we bring to investors curated deal flow that they can't get access to in a CommSec or an E-Trade or NAB account, that we co-invest our own balance sheet behind it.
Yeah.
Bring them something unique, because going out and sitting there with, call it Caroline and Jasper, and learning about their life and trying to, do a portfolio, review and selling BHP and buying Rio Tinto or buying CSL and selling ResMed. There's no edge there. They can go to any financial planner. They can go to any, group. Why don't we focus on bringing great deals that we co-invest our own balance sheet behind it and make that work?
This co-investment model is really good, right? Like one of the things that struck out to me initially, and I joined Peak as an intern. I basically said to you, just let me work for you for free. How did you come up with the co-investment model?
Look, I think it's a given. You have to put your own skin in the game.
Yeah.
You have to take ownership, and and we look at businesses all the time, Ali, in our job as well. And one of the most important question is, how much have you put in? Do you care? You want to know that these management teams and CEOs and investors and us actually are aligned. I think alignment is a big thing
100%
in life, because if you're aligned with the end investor, if you're aligned with the CEO, you will succeed with them because they've got hurt money. And just example, we did a transaction just recently for Noble Helium, and we raised $12 million with another group. It was a fantastic. But catching up with Dennis as a CEO,
Yep.
not only is he ex-Shell for 25 years and he bought got an executive from BP,
Yep.
but he's invested $6 million out of his own money, undertaking due diligence, and you know that you're with that journey together.
Yep.
So that's why you need to have skin in the game and ownership, a sense of ownership, and I think that's really important.
Hey there. Sorry for the interruption. It's only going to take a moment. If you liked today's episode and would like to see more content like this, please like, subscribe, and follow the channel. This will help us grow and invite more amazing guests onto the show. Also, if you know somebody you'd like to see on the show as a guest, comment their name down below or reach out to me and we'll make it happen. Now back to the video. Let's zoom out a second. Let's talk macro.
Yep.
Let's talk about Australia. A number of people listening probably have no idea about Australian markets, Australian equities. How do you think the Australian landscape is relative to peers, let's say, broadly speaking, US and London?
Good question. I think Australia's the land of the resources, and it's a land of opportunity. I think looking at Australia, just to give you a perspective as well, obviously we've gone through a pretty tough period the last month or so with what's going on globally, and it's pretty tricky out there. And hopefully our kids one day and the future's kids will have a much better upbringing, right? But it is interesting in terms of politics and leadership and what's happening globally. But just going back to Australia, I think it's all about mining, it's all about resources, right? And it's all about, our GDP is really driven by the end consumer, right? We've got interest rates that are actually higher than, let's say, the US and Europe. We're lucky with the natural gas, and we're lucky with the hard assets that we've got. But Australia's in a pretty tricky position right now with what's happening globally and exports and tariffs and essentially business confidence, right? So I think, looking at the market holistically from a macro perspective, we're in a period of basically similar to what's occurred in the 1970s, if you have a look at that. And if you rewind the clock to the 1970s, and we weren't born, right? Even though I'm older than you, Ali, I wasn't born too. But we were, a period of very high inflation, which is essentially cost of living, and a period of low growth, period of interest rates, high interest rates. And if you look at mimicking what has occurred then to really what is occurring now, what asset classes actually performed? And those asset classes that performed are hard assets. So commodities, precious metals, oil and gas, fertilizer. Now, we've got defense tech, which is something interesting, and AI, and we can talk about that. But it's really about the hard assets that will perform better.
Why do you think gold's falling? It's interesting.
It hasn't fallen too bad. I mean, to put it in perspective, the high of gold was 5,400. It's sitting at 4,800. So relative to the market, it's actually held up.
Yeah.
But, you're seeing global central banks are actually, we heard Turkey was actually disposing a big amount of gold just recently to fund essentially some of their liabilities. And so you are seeing sort of some central banks and countries and municipalities are actually exiting some hard assets to cover some liabilities. That is a problem. But I think gold is a fantastic position because it is an inflation hedge, and gold in a period of time of volatility usually outperforms.
Yeah, it's interesting, right? Because the comment you made around stagflation in the 70s versus now, I fully agree. Within the context of Australia, though, given we've got so much raw material, where I think Australia is probably missing is you've got all this raw material that comes out of the ground. It's immense value. It almost instantly gets shipped off overseas for processing. Gets converted into finished goods, comes back, and we typically consume it at higher prices, right? Do you think that system is broken? And what do you think is the government's role in potentially fixing it?
I think we're at a pretty interesting reflection point. I think, if you sort of see where the world is and in terms of industries, and I was having a discussion this morning with an investor, a fund manager, just where we're at. AI is a big sort of buzzword at the moment, but we are seeing complete industries being disrupted, which is very scary. Talk about analysts, and we've had that chat. We've got, an analyst, an investment analyst, who's doing a fantastic job. But I said, Liam, how many hours have you spent building this research report and building this model? He said, about 100 hours. I said, well, if you don't bring AI and integrate that and automation, your job is not going to be around. I said, my brother, right? He's in data analytics, sports, works for the Adelaide football clubs. I don't know if you watch the movie Moneyball, right? But that's what he does essentially. Now, I had a dinner with him last week, and he said, Niv, I'm not coding anymore. I'm just using basically AI to code for me. So look, the shifts are coming. We're seeing huge amount of job losses across the board, and that's going to exacerbate. I constantly have arguments with Emily, my wife, saying, fast forward 5 years, you will have a robot in our kitchen making us food, cleaning everything up, doing everything. You might not be needed, right? Like, we have a bit of a laugh about that.
You might not be needed.
Maybe I won't be needed too, right? Look, but the world is an interesting reflection point in terms of going back to what we need. And I think governments around the world need to act, right? And for the very first time in a long time, we're seeing a bit of a divergence between monetary policy, and monetary policy is interest rates, and government fiscal policy, because we're seeing fuel exercise being cut. We're seeing governments helping or trying to help businesses with loans and vice versa, but interest rates at the same time increasing. So we're seeing that divergence across the board.
Yeah.
Bottom line is, if you speak to your everyday person with, let's say, 2 kids and a young family, people are doing it tough.
Yeah.
People are doing it really, really tough out there. So I think it's a really, really interesting reflection point in terms of obviously that drive and perseverance. But, $90,000, $100,000 a year doesn't get you far after you can take into account your cost of living and taxes and living. So something has to give right now.
100%. Let's talk about some big themes. I think you mentioned a few really good ones there. One I want to talk about is energy security.
Yeah.
I think that what we've seen from obviously events that have happened this year so far is if AI, let's say, is the biggest thing in our future, then the biggest thing powering AI is the need for energy. And beyond AI, if you just go back a step to basics, right? Bottom of the pyramid, you need energy to power your house, you need all of those sorts of things. So what do you think, like from an energy standpoint, if I'm an investor, right? Let's just put my investor hat on. I want to play this game, I want to monetize, right? Where should I be looking?
It's a great question. Going back to basics, I mean, obviously you look at the thematics.
Yeah.
The whole data center revolution and the need for cloud and quantum computing and sort of robotics. I mean, I still think that's a big, big element of it, but you need power, you need energy. I mean, look, you're a big advocate of climate. I mean, look what has occurred in the last 3 or 4 years. We had a number of transactions in the gas, in the hydrogen space, green. What's happened to green hydrogen? I mean, what's happened to climate? And when have global banks across the world and Woodside and Fortescue said, look, this is just too expensive and we can't transport it. Is it uranium? Is the uranium the big fix to drive energy efficiency and energy storage? Or is it geothermal? Are we going to get it under the ground from the earth crust? I mean, that's all. I still think the market is still, we have to go back to basics. And you look around and are the wind farms and solar going to drive enough power into the grid? Look, I don't know, right? But I think it comes down to energy security, and there will need to be different ways to power.
Yeah.
And obviously what we're seeing with the whole fuel crisis and diesel, I mean, think about this. With diesel, you're using it for everything. Transportation, logistics, the cost of goods are increasing because of that.
Yep.
How are they going to support, the economy across the board?
Yeah, 100%. I think nuclear is actually pretty interesting. We've looked at a few projects, especially the SMR projects. In fact, a lot of data centers now. I think in the US, I was reading about this. Most new data centers have to secure their own energy supplies now.
Yeah.
In tandem with the actual project, and a lot of them are building SMRs, so like small modular reactors. Really efficient, and I think probably the most likely replacement for base load power.
Yep.
Hydrogen's been a pretty big disappointment, I think, and
a huge disappointment.
Yeah, despite a lot of capital going in that space, fundamentally because of problems of inefficiency and transportation, and solar's got intermittency issues, so does wind. But it's funny, right? Because I think when we're talking about domestic energy security, there's a trade-off, right? Oil's cheaper, it's abundant. At least it used to be.
Yeah.
But can change pretty quickly. And, I was thinking about this, and I was thinking that we're moving from a post-World War II world order, where essentially you had the US and Britain and sort of, NATO allied countries creating a stable environment where you could have free trade agreements. And now it's sort of might is right. So if you're a nuclear country, you can, pretty much do whatever you want.
But Ali, with that, look at Australia's sort of policies on nuclear.
Yeah.
I mean, we've probably got the most abundant amount of nuclear in the planet, but we just
we have a lot of uranium.
Can't do anything with it, right?
Yeah. It's so regressive. I think it's very aggressive.
It's very aggressive.
Yeah.
And that needs to change, and policies need to change, obviously. But it'll be very, very interesting to see, sort of fast forward 30 years and 50 years, what the world looks like and what is going to power, the economies. Because are we going to really build a data center in space?
I think we are, I think it's possible.
I think it's very possible.
Yeah.
It's going to cost a lot of money.
100%.
And a lot of resources.
Yeah. I mean, it'd be good to actually just have data centers working properly on Earth first. But I mean, you'd certainly get rid of a lot of problems with radiation cooling and, things like that. Let's talk about another big one. I think we're talking AI. I want to talk a bit more specifically areas within AI that you think are going to be most disruptive next 5 years.
I think let's talk defense.
Okay.
I think that's quite topical.
Yeah. 100%.
with what's happening right now. I mean, going back to the Terminator, it's literally, and the Jetsons, for those that are at home, we're literally replicating cartoons and movies into real world applications, sort of fast forward 30, 40, 50 years. It's quite incredible about, where the world is going based on, I know there was a Simpsons predictions and where it's at right now. But I think defense and AI is something very, very big. I think it's quite scary.
Yeah.
Because right now, and you've seen it right, with what's happening in the Middle East, unfortunately, we're seeing drones that are costing $20,000, $30,000, $40,000. You can't go out and spend $1 million on a missile to take a $30,000 drone.
Yep.
That is a big problem. So the whole autonomous warfare and swarms and what's happening with defense is a huge initiative, a huge problem, and there's trillions of dollars being invested in it globally.
Massive.
Right?
Yep.
Massive amount of money. So AI, autonomous warfare, and defense is a theme that is just going to get bigger. And fast forward, I think 5 years, the next war, and that's not going to be fun. It will literally be robot to robot, right? And that's scary because you remove the emotion coming out of it, right? So, for example, that we know Ali unfortunately is going to, has some risk. It's like if I can control a swarm of drones or a swarm of submarines by buttons, and I can sit there at home. I mean, it's pretty scary where we're heading. I think going forward with AI and autonomous warfare. So that's
I think that's scary.
Watching. Yeah.
I want to talk a bit about entrepreneurship. I think it's a segment that we love to cover. I'm going to ask you a few questions.
Sure.
Tell me first your biggest win, and second your biggest failure, and what they taught you about yourself.
I'll need to think about it. So the biggest monetary win was a company called Neuron, and for those that are listening, it's a now an ASX 200 company. It's trading at a $2 or $3 billion market cap, and we backed it pretty early. There was a transaction that didn't occur, and unfortunately the stock absolutely nosedived. I still remember bringing the entire management team into our old office, and it was quite a vocal catch-up just before I headed off to Canada, actually. And I thought, you know what? I like these guys. I'm going to back them.
Yeah.
And we bought a lot of shares at very low valuations, $1 and then $2 and $3, and the stock continued to go up. The thing is, you sometimes, you and I know that you might make 10 or 20 or 30 or 50% profit, but not a lot of the time you go for that 20 or 30x.
Yeah.
Right? And sometimes you just have to really back yourself, I think.
How long's a piece of string?
How long's a piece of string? Sometimes you have to, right?
Yeah.
So that was a nice transaction, a nice win, and very grateful, but got lucky.
Yeah.
Got very, very lucky. And I think going back to what we're saying, entrepreneurship, you have to attract your
100%.
own luck.
Yep.
And it's all about law of attraction. So I think that's really, really important. Biggest failure. Look, I need to think about that one. I mean, there's been a few.
Not the options trade.
Look, the options trade.
Yeah.
I mean, when you wake up and it goes to zero. We actually had an options trade. I mean, that actually I bought, and I didn't tell you this story. I was in high school still.
Yeah.
And I was buying options, right, which is for those that are listening at home, is the right but not the obligation to buy and sell the stock. And then I still remember looking at the screen, and I had $10,000 in this option, a Barry option. I said, what is a Barry option? And then I rang up and I said, what happened? He goes, well, I'm sorry, sir, it's gone to zero. And I said, what do you mean it's gone to zero? And I said, well, you've hit your barrier, it's gone. And I just went numb.
Yeah.
As a 16-year-old to lose $10,000 in a single day. I mean, look, you learn from it, but what I'm trying to say from the failures that we've had, I think you need to learn, and you need to progress and need to adjust. I mean, in business, don't go up in a straight line, and also in family, right, and friends, and you need to surround. I'm all about
100%.
Obviously we said the law of attraction and surrounding yourself with racehorses, right? Surrounding yourself with people that are like-minded, that push you, that help you drive, and also have fun. I think having fun is really, really important.
The biggest thing. Otherwise, why do anything? You know what I'm saying?
And that's what I'm looking at, my life right now, now 20 years in the industry, and I've got 2 young kids, and as you said, got the house and the business. And look, things are good, but you look at it hopefully in 40 years' time or 50 years' time, and I'd say you only regret the things in life that you don't do. So I think that's really, really important. And right now, it's an interesting reflection point, because you look at it and go, well, do you go travel? Do you go take the kids? Do you do something else differently? How do you, I mean, not saying to stop work, because you and I know that both of us can't retire, right? I mean, what else are we going to do? We're going to have coffees and then go, what else are we going to, do and look for opportunities and deals? But I think just, always push yourself and not regret the things in life that you don't do. I think that's important.
Amazing advice. So if I'm a young kid, right? If I'm a young kid looking at the world today, let's say I'm in my early 20s. I'm looking at so many things happening the workforce is becoming increasingly decentralized, right? People are working, everybody's starting small businesses. AI is taking away jobs. There's, a changing economic environment. I'm thinking, you know what? I actually want to do something for myself. What advice would you give that 21-year-old when they're looking to start their own business that's held you in good stead?
I think, and it's really, really interesting. It's really interesting because right now, if us coming out of university, I think things are changing very, very quickly. I think as a young grad or a young business owner, you don't want to sit there in 2026 and go, what's happening in 2026? You always need to look 4 or 5 years ahead. I think that's really, really important because the world is changing so quickly from technology, from robotics, from automation. There'll be sectors that won't be around in 5 years' time. Now, going back to AI, it's great to have a research report, and this is something that we argue internally. But how do you know that the input and the data is actually authenticated and actually validated? So I think that is a big, big opportunity, I think, in that segment because you don't know that the AI, whether the code is correct and you're relying on the AI. I think whether it's legal using AI or guys, financial advisors or, sort of effectively automation, I think that's a big, big opportunity there.
AI validation?
I think AI validation is something interesting. I think energy transition. Talking about data centers and whether it is in space or non-space or, robotics, you need power. Where is the power going to come from? So if someone can actually develop, a little box that can actually plug in, that can actually power something, unique, I think that's a big, big opportunity about energy storage and energy validation. And then I think defense, you have to look at also globally where the budgets are and where's the money flow going. So yes, commodities are interesting. But how long does it take to dig some things in the ground and turn into production? Let's be real. It takes 10 years, 15 years, right? So I think those that are coming out of university or even coming out of high school, not even high school, obviously you have to work hard, surround yourself with successful people that have that drive, but also identify areas where it is a big addressable market that you're seeing global funds, municipalities, governments putting significant capital towards. Because that's what you want to know. You want to follow the money flow.
100%.
I think it's really important.
Like to build something and expect they will come is not, that time's gone.
No.
Growth or profit? What's more important?
I think profit at the moment. The world's changed. If you asked me that same question 2 years ago, I would have said it's just all about growth. The market right now is looking, it's great that you're growing, but you don't want to grow and increase your burn. You want to grow and be profitable. The good thing from Peak's perspective, we're growing and we're profitable and we've been profitable all through. And, so we haven't, there's been periods, for example, obviously that we've been quiet and we've been quiet on purpose because we're aligning with the client because anything that the client takes, we're taking on our own balance sheet and you've got that alignment. So the client knows that if we're coming in, we're backing it, but you need to run a business that is profitable from day dot.
Now I've got to ask, if I'm, let's say, just an average punter, right? I want to understand how do I analyze a company like Niv Dagan's going to do it in, let's say, under 60 seconds. So you're in front of your desktop, you're on your CMC, ComSec, whatever. Right from when you type in the stock code, what are the first 60 seconds like? What do you look at and say, I'm either going to buy this stock or this is rubbish?
I think things have changed, Ali. I think you just plug yourself in Claude or Grok and give you a really great summary. Now, going back to validation, how do you know that information is validated and accurate? But if you knew nothing about a company, going in, looking at the stock price, looking at the market depth, maybe looking at the ownership. I think financials are one thing, but that ownership and having a look at who's on the board. I think smart money follows smart money. I think that's another really big tip for those that are young. So if you're looking at sort of who's invested, who are your top shareholders, these are about 60 seconds, right? And what have they done that's successful? Now, they're not going to get it all right, but you know that the people behind the companies, and if they've got a track record of building shareholder wealth and execution, and they've put their own money behind it, that's critical.
Insider skin in the game.
Insider skin in the game, but also the people within the shareholders, who are backing it and what is their track record of success.
Definitely. So I always look at the top 20 at the back of the annual report. That's a good place to start.
Absolutely.
If we're looking at, let's say some of the companies, one thing that I typically look at, especially if it's, let's say, X commodities, is burn. I think, just going back to the conversation around growth and profit, me personally, I'd like to see, how's the burn tracking? How much inefficiency is there in the business? How much can the bottom line actually be maximized here, right? And I think that for a lot of people that are just taking a punt on the ASX, just sitting on the couch or whatever, right? It's a bit about I'm gonna buy what my mates are buying, and like you said, you could plug it into Cloud Code or whatever.
Don't listen to your mates.
Yeah. Okay. So that's the advice.
I don't know if that's an advice, right? But you have to look at the end of the day, like you don't know what your mates are doing and if they're any good at what they do.
Yeah.
I think smart money follows smart money.
Yeah.
Look at the people that are in the company and look at the shareholders who are in the company and have a look. I'm talking about in 60 seconds, right? Inefficiencies, I mean, you and I know that, once we give the management teams money, and those probably listening, we've lost that control.
Yep.
We've lost that control, and you can tell them what to do, or you can give them feedback, or you can help them write announcement or pitch decks. It comes down, will they listen? You need to have board control from that perspective, and you need to have that skin in the game. But for those at home that are really new to investing, my biggest tip is looking at the shareholders and looking at the skin in the game. And do they have a track record? Like, for example, Dennis from Noble Helium.
Yep.
That's built Warrego and sold Warrego to $440 million from Hancock, and now has invested $6 million in Noble Helium, and he thinks this potentially could be bigger than Warrego.
Yep.
So you're essentially backing the management teams, and you're backing that skin in the game and the shareholding.
You want to look for essentially players with that track record of success, because they're going to bring that in wherever they go.
And momentum drives momentum.
100%.
Momentum drives momentum. So always back the right people.
Yeah. If you got wiped out, let's say you got wiped out of everything today, all you had to your name was $10,000. Where are you putting it?
Right now?
Right now.
Oh, look, I'm being biased because I sit on the board of two of these companies, but either Terra Uranium or Novotech.
Okay, then tell us about that.
Terra Critical Minerals, I mean, I'm a 20% shareholder, so I'm a bit biased, but they've got essentially a holding a uranium portfolio in the Athabasca, and that's got $2 million backing by Ather Energy, which is a $250 million uranium company. We talked about uranium, and they're going out to drill. They've also got two tungsten assets, one in Nevada and one. And it's a really, really tight capital structure with strong ownership and strong backing. And the number two shareholders had significant shareholder wealth. His name's Daniel Raheny. He built, FRS from nothing to, a few hundred million market cap, VRS, BSA, and a few others. It's got a great following. It's a really good structure. Novotech just acquired a business called Corellia, which is in the biochar carbon removal space. And for those that are home, have a look at what's happening globally, essentially in the amount of money inflows that are going with carbon removal and what's happening with data centers and creating your own data, carbon credits. So NVQ and T92 are the two stock codes.
Amazing. This show is called On-Ramp. The reason it's called On-Ramp is because it's an on-ramp to the knowledge highway for me. And I get to meet cool people like you and have these amazing discussions. So I'm going to ask you my final question. What's your next on-ramp look like?
What's the next opportunity to look like?
What's the next thing you want to do? What's the next peak to climb?
I'd love to build a data center in space.
That'd be nice.
That'd be nice.
Stay tuned for that. Thanks, Niv. Amazing.